cable longs, but that doesn't mean that the cable can't continue higher. It's just it was a very big number. She said it in the chat room earlier this morning, and I don't want to, like I said, I don't want to misquote here, but
Do they get relief like U.S. mortgage holders?
yeah, I think it's
Something
like,
like that?
you ask for forgiveness, or
Mm,
allow me to pay 30 minutes, or 30 minutes, 30 days late,
yeah.
without fees. I don't know,
Okay.
but anyway, some fairly big numbers. And we're if you look at the FX market, it is we're kind of range bound, obviously. The euro dollar is knocking its head up against resistance. This is you notice with the euro. I want to point out that the euro dropped to retest the trend line yesterday. Okay,
Yeah.
we had this little inverted head and shoulder pattern, and it took off. You can see it like intraday. We had an inverted head and shoulder pattern, took off, and completed the head and shoulder pattern. But more importantly, is we only pulled back 38% retracement with the euro. So you have to be a little careful shorting the euro. Now, I'm looking at the euro dollar, and I've got some mixed signals here, because the euro dollar is right up against resistance, but then so is, you look at the Aussie. The Aussie's really at key resistance at the 64-cent level. This is a level that last week I have written in my notes about. This is such key resistance. It is because we're at not only a 78% retracement of this drop here, but also a 618 retracement of this drop as well. So very key resistance in the Aussie. And I'm watching the Aussie, especially if we break through this support here, this trend line. This daily trend line comes in, let's say roughly around 63.70, and it's going to be pretty important support for the Aussie bulls to hold. If you didn't see this last night, I'm gonna pull this up. If you look at the Aussie business confidence numbers, this is the lowest number from what I understand in history. Um, Business confidence dropped off. Now the Aussie spiked up after that, and then after that, some China trade balance numbers came out and helped the Aussie higher after that. But in European trade, the Europeans came in and sold the Aussie up at this resistance when we were up here overnight, and we're just kind of bouncing around now. But the Aussie looks a little stretched. I mean, if you look at here's like the 4-hour relative strength. We're overbought. Probably need to work off some of these overbought signals. And if you look at, I'm gonna go over to uh, the 4-hour analysis for Grega Horvat. He talks about his wave count. 1, 2. This is the 3, the prolonged wave 3. Wave 4 could take us back towards 63 cents before we'd go into wave 4 to complete wave 4 to 5, and which would be up at 66 cents. So we might get a near-term pullback in the Aussie, and based on what Greg is seeing, he is seeing this support holding. So that would mean a drop back down towards 60, let's just say roughly 63 cents, and then a bounce. That's the count he has currently on Forex Analytics. And remember to, if you want to, read more about it, you can read about it on Forex Analytics on the harmonic tab sign, or analysis. But we've been looking at this Aussie 64-cent level as being pretty key resistance. If you look at the longer term, resistance where we're at, it's pretty key. Now, whether we get a good pivot off of here is to be seen, and I think a lot of this is going to have to do with risk aversion, risk appetite. Stocks continue to stay strong. We're at 28. We're at 2,800 in the S&P. I can't really be. I can't really be bearish the S&P while we're in this ascending um, uh, uh, channel. Okay, but I know that because we've been talking about it, how really all this key resistance comes in around the 28.50 to 29.30 range. This is all going to be very key resistance for the S&P as we move higher. And like I said yesterday, everybody's looking at these levels. Everybody's looking at these prices, and the risk is at this point we don't quite hit the obvious target that everybody's looking at, and I think these are the obvious, you know, targets for the S&P. I think everybody's looking at these prices. So what's gonna intraday for the S&P, what's going to turn me a little bit more negative on the S&P is if we start, hitting lower lows. And that isn't the case right now. Right now we might develop some sort of double top possibly, but I I can't really be too bearish on the S&P in at its current state. We'd have to drop back below the support, then, do something like that, which we're far away from. But as Dale pointed out, it is Tuesday. The S&P was down yesterday. Nasdaq was up, and if you look at the Nasdaq's really outperforming here. The Nasdaq's near its 618 retracement, and that we have to be cognizant of, because as Nasdaq stocks outperform the S&P and the Dow, that's typically a pretty overarching bullish sign for the market. So, when you have technology stocks or higher beta type of stocks leading the charge, you have to be a little bit more careful about being, bearish equities. Now, one of the other charts that I really wanted to talk about this morning before I bring in Steve and Stelios is the dollar yen. The dollar yen is trading really weak, and I'm very upset at myself for not being short the dollar yen from last week in the higher 108, closer to 109 levels. I knew it was key resistance. If you didn't know why it was key resistance at the time, I'll tell you why. It was a 50% retracement, also the 127% extension of this move, right? It was knocking its head up against 109.30. And at that point, I knew I needed to be short the dollar yen, but I didn't, because stocks were stronger as they are right now. Stocks were stronger, and I'm like, man, it's gonna drag up the dollar yen. I feel that it's going to, and it ended up not doing that. And so now the risk is that where we're at with equities, if they do indeed start rolling over a little bit, I think one of the trades that's really going to start playing out is short dollar yen, or actually just strong yen, right? We're going to see the dollar yen trade back down towards something like this, like down towards 105 or whatever. Now, if just taking into account what I was saying about the Aussie, maybe one of the better trades out there is short the Aussie yen, because if you look at the Aussie yen, we've basically retraced 618 retracement. So I think the Aussie yen, especially if we get below these levels here through this support, then you got to start, wondering, is the Aussie yen ready to turn lower? And also, is, risk appetite, the stock market, in other words, are we about ready to turn lower there as well? So I think keeping an eye on the Aussie yen, the yen pairs right now, I think is going to help you really identify if stocks are going to continue higher, or if they're going to start to roll over a little bit. So, I think those, the yen's got to be watched really carefully. And like I said, I'm not in them right now. I'm not short the Aussie yen. I'm not short the dollar yen. I'm a little, like I said earlier, I'm a little upset that I'm not short the dollar yen based on what I was looking at last week. I just didn't have the confidence to be trading that at that moment. But I think it's worth noting, and it's worth watching. But once again, stocks are really strong here. The narrative right now, everybody's pretty bullish. You got everybody looking at this, possible U-shape recovery. Not necessarily a V shape, but a U shape, and it's getting priced in. A strong recovery is getting priced in to equities right now. As you guys know, there's a lot of things that can go wrong between now and 6 months from now, especially with this virus. But right now, it does seem like things are improving. We're getting, we're leveling off as far as hospitalizations, and hopefully, over the next, week, we'll start to see the death rate level off and possibly go down. And I think those are all positives, but they are definitely being priced into the markets right now. And I also have to note that sometimes we need to step back and say the stock market is not the economy. All right. And I know a lot of us like to believe that the stock market is a reflection of the economy, and it is to a certain extent, but it is not the actual economy. So
it used to be.
When?
It used to be a lot more than it is today, at least, when there was a lot less manipulation.
And why is that?
Because we had much freer markets in the past than we have during the past 20 years.
Right.
So, when you have free markets, the stock market at a big extent does reflect the health of the economy.
Right. And because of all the actions of not only the Fed, but other central banks, it is less of a free market. It is more of a
absolutely
Ponzi scheme, pyramid scheme, whatever you want to call it. It is what it is. You guys can, anybody out there can call it whatever name it is, but it's the game that we're currently involved in. And so you kind of got to play the game, right?
Managed.
So, what's that?
It's a managed economy by central planners. So
it is to a certain extent, it is. And so that's why we have to be mindful of that and realize that, just because the economy may drag on for quite some time doesn't necessarily mean that the S&P is going to go down to 1800 because of what the Fed predominantly, but other central banks have done as well. So, just keeping that in mind as we navigate through these markets, I think is going to be pretty important for all of us. So, Steve, good morning. Stelios, how are you? Dale, good morning.
Good morning.
Again.
Good morning again.
Good morning again. Yeah. So one of the things, and I'm sure you're going to talk about this, Steve, is this big move in gold. So my question is to Stelios: is silver going to play catch up, or because it's such a base metal, industrial metal, it's really going to be a laggard for quite some time? What are your thoughts there?
Well, it's already been lagging quite a bit. If you look at the gold-silver ratio, I cannot express how bullish I am for silver. It is going to be, it's going to lag always gold, but I think it has a lot more space to rally now, percentage-wise. So,
so I think if gold goes to 2,000, where I think it is going, silver is going to go to 1680 or 1580. Sorry, I'm joking. I'm joking there.
Yeah.
But what's your bullishness in silver, and why do you feel that silver's got, from a percentage standpoint, a lot of catching up to do?
I think it's been beaten down excessively because, like you said, it's an industrial metal, and obviously production is halted in many areas of industry where it's used. But let's not forget, it's also a monetary metal, and that aspect of silver always comes into play when there is inflation. And I'm not talking about the reported inflation, but asset inflation in general. So I think if you ask me, if gold goes to 2,000, I think silver is going to be hitting the mid-20s. I really do.
Still, there are a lot of mine closings. AG had to close their silver mines in Mexico. So, with the virus affecting everything, a lot of things are being shut down, from mines to pork processing plants to beef processing plants. So, they're talking about closing down an Amazon shipping center. So the virus is contaminating the supply chain across the board, because you still need people We're not. They can't send robots in to do a lot of the mining and everything else. So
Yeah, absolutely.
so supply, that would mean less supply if they're closing the mines up, right?
Yep.
Less
Actually,
supply, stronger silver prices. All right.
Yeah,
Very
a killer combination. You have a reduction in supply that can't be restored like in zero time.
Yeah.
At the same time, you're flooding the market with
Demand.
trillions and trillions and trillions of dollars. So when demand comes back on the table, since supply is always slow to adapt, imagine what kind of an inflationary spike you're going to have at that point in time.
Yeah.
Yeah,
Got it. All right.
our friend John says silver goes to 26. Write it down. That's the first proper resistance that I see. I mean, if you look at the monthly chart. So I kind of agree with John. It's going to get there. The question is how it gets there.
All right. Well, very good. All right. Well, guys, I want to, well, for those of you that are listening in, I want to say thank you all for your support. For those of you that are part of the Forex Analytics family, to show further support of this free face webinar that we're doing, make sure you visit Forest Park FX. If you want to be part of the Forex Analytics family, you want to join the reimbursement program. If you can switch to one of these brokers here, you can do that. And if you're in North America and you can't be part of this program, at least you can get cashback rebates. So just talk to them at Forest Park FX. There's there are links how you can get a hold of them. And with that being said, I want to pass it over to you guys.
Thank you very much, Blake.
Thanks,
have
guys.
A good one, Blake.
Have a great day, and I'll see you those of you from Forex Analytics. I'll see you on the daily roundup in 4 hours time.
Thank you, mate.
Thanks, guys.
So
Stel, what else did we have overnight before we go to our last roll for yesterday's winners?
Forgot about that. Well, the main issue now seems to be, or the main talking point is, when do we open up economies again and countries again? Which we've gone from in the last week, from cases increasing and there being a lot of doom and gloom, to hey, we're almost ready to start opening up stuff again, which I think may be a little bit premature, but especially in the US,
it's premature.
Yeah, especially in the US, Trump really wants to get things started. I was reading that there are several governors who are against that and who are forming alliances and saying, we're gonna decide when we open up our state. So this is going to be interesting to see how this pans out. But tell you what, every country is feeling the effects of this lockdown, and we have now earnings season starting. We had JP Morgan, the first one today. Before the open today, basically they announced obviously a big drop in earnings, and they're I think they set back about 8 billion for credit losses and or potential credit losses.
I'll take the over. If you don't mind.
And this is what scared me. Jamie Dimon said that we have strong liquidity and well capitalized. When you see CEOs saying this, that they're looking at this. I remember this when I was at Merrill in 2007, 2008, and they were saying every quarter, every month, don't worry, guys, we're well capitalized. And we were about a day away from going under. So that wasn't fun, being there on the floor every day waiting for the bosses to actually tell us what's happening. And even worse was our group, the swaps and bonds group, had the best years in 07, 08, 09. And it was amazing years because of the volatility, as you can imagine.
But you went down with a ship.
Yeah, that was unfortunate. Well, what can you do? It's part of life. So the main thing now, as we see, is quite a few countries now showing what seems to be a leveling off of new cases of deaths, which is good to hear, obviously. I just think that with earnings now coming up and more and more economic data being released, I think people are going to get, we're already pricing a lot of bad stuff, but I think this is going to go on for a while. And eventually equities have to follow. Having said that, what Blake said is very true. The Fed and other central banks directly or indirectly are going to be buying stocks or, everything that moves. So,
or anyhow, funding those that buy stocks in essence,
exactly.
Which is almost the same thing.
Exactly. But, this is going to be a big force. I was, if you for Forex Analytics members, I was bearish. I turned bearish S&P and DAX, which is the two indices that we cover. S&P well above 3,000, DAX, I can't remember the level. And I said, look, this is going to be, this was in February when the virus was really starting. I said, look, I think there's a big wave down coming. And when the S&P hit, 23, 2400, I switched back to neutral. I said, look, this big influx of stimulus is going to probably stabilize the markets, but I still think we have one more leg lower. So how low? I don't know. Is it going to be 1,800, 2,000 in the S&P? It's tough, but I think it's doable. But I definitely think there's going to be one more leg lower as people realize that the economy, the hit on the economy is going to be greater than anticipated, and is going to last longer. So that's my view on equities. Apart from that, Blake mentioned the Chinese data. There wasn't really much else overnight, and there isn't really anything today either. We're going to be waiting for Thursday and jobless claims yet again to get a feel for how things are going. And remember, last 3 weeks, 15 million jobless claims in the UK. That's a big number, and this is not a number that's going to come
in the
racing
US,
back in the US. Yeah, in the US.
Yeah,
in 3
actually,
weeks.
it's more than that, Stelio. I think it's closer to 17 million.
Okay, well, whatever, 15 to 20 million. They're not going to come back, racing back as soon as things seem to be okay. That's my worry, and I hope I'm wrong.
Yeah,
but
big part of them is going to take a lot of time, assuming the best case scenario.
Yeah, a vaccine, and cases are dropping, etc., etc. So
the economy going out of recession as soon as possible, all of which are, not easy to happen.
Yeah.
Do you not
great
think
call moving to cash sell back then?
Well,
a lot of people were, it was a great move.
I switched to cash some months before the top. I didn't catch the top, obviously, but I did. It was like 9 months ago or something like that. So
how's that bearish German bond position working out?
It's positive. It's not really doing a lot yet, but it's positive. I'm up like 1% or something like that. It's nothing major. I just see this as a trade that you have very little downside or potential downside, and the upside could be, the spike is always going to be to the downside.
Well, Germany hasn't nationalized their bond markets like we have in the U.S.
And they won't. I can tell you in advance. And they won't.
Yeah. Okay. That's a big difference. Okay.
Yeah, I'm bearish bonds, although I prefer to be short bonds, which is what I am short against, rather than treasuries or anything else. I'd like to be able to short Greece as well, but I can't. I'm just a retail person. So that's.
Thank you.
Do you not think there will be ramifications for China after this is over? Ramifications from whom, and what level? Who's going to punish China and for what? First of all, legally speaking, there is nothing you can do. I mean, who are you going to go after? The people that are eating like bats or whatever. You're going to go after the government. Who's going to go after the Chinese government?
Batman.
Who? The US that is being vendor financed by China.
Batman.
Yeah. I mean, outside of what Trump wants to, play the hard guy against China or whatever, China can make the American economy, and not only the American economy, I'm just referring to the US now, since Trump is, the biggest proponent of, going against China. But something, to be able to punish somebody, you have to be in a position of power. And against the vast majority of the countries, China is in a position of power at the moment. China is the creditor of all those countries. Particularly, it's been vendor financing the US for a long period of time, sending out cheap goods and getting in advance just IOUs. It has been accumulating real tangible assets in the vast majority of the countries, and they're not afraid of any type of political ramifications simply because they don't have a political cycle. It's the Communist Party that is in charge of everything. Nothing can really move it unless somehow there can be some type of a big a prolonged social unrest type of situation in China, which we haven't seen anything, even close to that at all. So I don't think, you can be objective and really hope that you can see any type of ramifications against China. I think it's extremely unlikely to zero possibility of happening. I understand that sentimentally speaking, it sounds like a good idea, or like, it makes sense. But practically speaking, it's a 0% chance of happening. As simple as that.
Okay. Actually, two questions I want to answer. FX Trader is asking if I knew a certain guy at Barclays. I don't know that name. Sorry, I was there from 2002, 2006. And Rob is asking if we have seen the top in ZN. I assume he means 10-year treasuries.
10-year treasuries, yes.
If you put a gun to my head, I would sell it, but I do think that we could get a lot closer to zero rates, zero yields in that. Unfortunately, I think we can get there. If we get anywhere near zero yields in the 10-year US, I will be shorting that, but not yet. I'd rather be short 10-year bonds.
I think we can see a higher high. I think we can see one more higher high.
I'd rather be short 10-year bonds, which I am at like minus 0.6 or something like that. So minus 0.5 it was when I shorted them. So yeah.
Yeah, I totally agree with you.
Yeah. And that's it. Nothing else has happened overnight. We're still waiting to see, what's going to happen in many fronts. Oil is a little bit on the defensive again today. Clearly, the 9.7 or 9.8 million barrel cut was a little bit less than the market was expecting or hoping. Yep. So they're probably going to have to step in and announce some more, which I think they will. They're going to do the same thing as
they will.
And until it gets up to.
Let's see if they will do it before we see new lows. That's the question here.
Yeah.
Currently just below $22. The low was at $19. So theoretically speaking, we're just one bad day away from new lows. We've seen days like that.
Yeah, and it's interesting to see oil being at the lows of the day and equities not caring at all.
Equities,
funny, right?
equities after the last rounds of trillions and trillions of dollars temporarily have completely decoupled to anything that has to do with fundamentals of the economy. Completely. At the moment we have economies completely shut down with unknown recovery times, because as we said, opening up the economy doesn't mean that the economy recovers immediately. Quite the opposite. And equities couldn't care less. But I'm still long. I'm happy about it, but I think that this doesn't have many more days to run to the upside. I'm still looking for my zone of targets in the S&P, which, as I mentioned yesterday, it's between 28.95 and 29.32. So I think that's a really pretty zone of resistance, and I'm going to be reversing my position from long to short up there. And I do think, we can make it up there. Another 100 handles to the upside for this type of stupid market can easily prove to be a couple of days of upside and no more than that. So we can be there.
Yep.
Now let's go over the roll. Yesterday, due to being in essence like half a holiday day, we had less people. The eligible ones were 316. And let's roll. So 316. Let's go.
This is the last day that we're doing this.
Yeah.
22.
22. Let's see.
Somebody's going to yell, bingo.
Yeah, 22.
CT. That's a scan, right? Like the MRI, CT, X-ray.
Yeah, I wrote it down. I have the last name of the person as well, and the email. Okay, perfect. Next one. 257. 257. There we go.
Bimal P. Okay, good. One more.
Let me mark it on the other. Okay, done. Last 236. 236. Okay.
Okay, it's awesome. Send me those whenever you have them, and I'm gonna.
I will.
The
Oh,
lucky
okay.
people.
Thank you. Okay, great. Now we can go over to the rest of the markets and questions. We now know listed companies don't even need to open their doors in order to trade on the exchange. Proof fundamentals haven't mattered for quite some time. Yeah, but the extent is becoming a lot more ridiculous after this bout of, economic bailouts, Rob. So yeah, the comment in general is valid. Blake mentioned watching the Aussie yen to get a signal what happens to equities risk of. Can you elaborate further? Yes. I mean, traditionally, not as much as in the past at the moment, but traditionally, the Aussie yen has been one of the best FX pairs to emulate what's happening with risk on, risk off. That's simply because the Aussie is one of the sensitive risk currencies, and the yen is one of the two best, was at least one of the two best safe haven go-to currencies when things went wrong. Everybody was, piling up on the yen and the Swiss franc. I think that Swiss franc is, a much better proxy nowadays, but anyhow, yen traditionally has been one. So that's why Blake said that, seeing a reversal in the Aussie yen might prove to be an indication that risk is going to be turning lower. Speaking of that, we have a gap. We have the confluence of a gap. You can see it here. We've even set an alert at 69.40 roughly, confluencing with the 50 daily moving average. We almost fill that gap today, almost. I mean, we were just a few pips away. That can prove to be an area of resistance. And after that, we have 70.20. It's the 61.8% fib. Also, previous support might act as resistance. So these are areas to monitor as possible resistance areas in the Aussie yen. And since we are having a look at the Aussie yen, let's also have a look at the Kiwi yen. Here's the Kiwi yen. So far, price action has played out, perfectly as expected. Last time we saw it, we were somewhere there. We might get rejected from here. A nice confluence of resistances at 66.50. Alternatively, we might move a little bit higher towards the 61.8. But, so far, I do see these rebounds as corrective. If you want to get an extra level here, we can fib extend the first leg higher to second leg higher. That would project a move towards 69.50. You can see. So, that general area between like 68 and 69.50 is an interesting area of resistance. The pair might get rejected from there if it can actually even make it there. Yen is cheaper, holding Swiss francs long leverage. You pay with a kidney. Stelios answered that question about ZN, and I don't have much to add here, guys, having to do with bonds. Listen, so far, here is the 10-year Treasury, here is the 30-year Treasury, more or less this is the same type of formations. There's nothing really bearish yet. I mean, we haven't posted a higher high. There is no question about it. But, nobody can doubt that they're holding up quite well. Keep in mind that the Fed has literally almost nationalized these markets. They've been buying like the vast majority of paper in these markets. So, it's very hard to fight these markets at the moment, right? So keep that in mind. So do I think that we can post a higher high? So in essence, see lower yields. Here's the 10-year yield. Yeah, I think we can. I think we can. And as Stelios said, we can see prices having to do with yields closer to 0%, right? I mean, it's completely illogical. It makes no sense. But it makes sense if you consider that, in essence, the Fed now is like not the buyer of last resort, but more or less, almost the only buyer here, so they can do whatever they want with this market, at least until the market completely loses faith in this Ponzi scheme. Okay, until that happens, yeah, it's not unlikely at all. And as Stelio said, your best bet is going with the Bund, because you can be certain that the Germans are not going to do the same with the Bunds. I mean, they're not going to literally buy the whole market. So you have a much better chance in fading strength in the Bund at the moment than doing it with treasuries. So keep that in mind. Now, having to do with metals, no real big surprise there. Keep in mind that gold almost touched a few minutes earlier the 78.6% fib extension from the all-time high. You can see it up there, posted in 2011, in September in 2011. That was at the peak of the European crisis. That was with some delay to the US. And this is the 78.6. So this is quite a formidable area of resistance, but no real reason to believe that gold is going to stop there. The next upside resistance is the 127% extension of this pullback that we see here, which comes at 1772. Given that we cross through 1733. So 1733 above that 1771. If you are one of the people that believe in the slogan that says, don't fight the Fed, don't fight the Fed. And keep in mind that wanting to be short gold, in essence, is fighting the Fed. What has the Fed and the vast majority of the big central banks said that they are striving to do? And I believe that that's the only thing they're going to succeed in: create inflation. I believe they're going to get that in spades. So in essence, in my opinion, trying to fight gold strength is trying to fight the Fed. So, do that, at your own peril. The Dado, I don't know what's how I should pronounce your first name. I see you blame the lottery luck every single day that we've had a lottery. So I'll tell you what I'm going to do about you. Send me an email, and I'm going to give you a month for free. Okay, mate? So you can stop blaming. So you can stop blaming your luck. Okay, is that a deal? I'm going to put my email here.
What's the expression, Steve? The squeaky wheel gets the grease.
There you go.
Hey, squeaky wheel. Congratulations.
Yeah. That's on me, okay?
So now you can't. What's cost?
So now you can't blame yourself for being unlucky anymore. Okay, question about Bitcoin. Listen, in the short term, I'm quite bearish because this rebound higher looks corrective to me. And I think that especially if, as I'm assuming, risk turns lower during the next several days, at some point during the next several days, I expect risk to turn lower again. I think that Bitcoin is going to follow lower. And the same can be said about Ethereum. You can see it here. So I think that the next move for Bitcoin and Ethereum is probably lower for the reason I just said. They've already proved beyond any doubt that they're very strongly correlated with risk, and it makes sense because I've kept saying all the time that they are digital risk. In essence, they're like very risky speculative assets, so it makes sense that when risk is selling off hard, they'll be selling off as well. So turning lower in indices, which I think is a very high probability scenario, should get them turning lower as well. Ethereum, I think, can retest the $90 mark, and I think that Bitcoin can go back towards $4,000. That's what I think about Ethereum and Bitcoin. Yeah, I totally agree with what Dominique just wrote. Most people are leveraged, so Bitcoin isn't exempt from margin calls. I'm 100% with you there. Steve, any thoughts on crude futures, current, and far month spread? Listen, in general, I think that we are at the very, very, very last phase of this crude oil weakness. Now, how long can it last further? I think it's going to be very hard for weakness in crude to extend beyond worst case scenario, would say a couple of months. I mean, very worst case scenario. I think it can move a lot lower and surprise people. I still believe that you can see like some crazy print in crude, like $15, 12, 13, 14, who knows. But I believe that whatever type of weakness you see below 20 is going to be temporary, very temporary. I think that central banks will be extremely successful in creating a lot of inflation. And as anything that is a real asset, crude is going to benefit from that when priced in dollars or fiat currencies in general. Okay. So I think that any weakness from here on is going to be a great buying opportunity. Of course, you have to time it right, and to time right such a reversal, you might need to take a couple of shots. So you have to be cognizant of that and not be afraid to take a few shots and lose a little bit of money here and there, because once you actually see the reversal, I think there's going to be, at least in percentages, huge upside. I mean, let's assume that we spike down to $15. I think that you will be able to make 100% being long, because I think that we're going to see $30 crude easily within the year again. So keep in mind, I mean, $30 crude doesn't sound like a big number in crude, especially for those of us that have been trading, in the past, and 10 plus years ago, and 20 years, some of you ago, etc. But keep in mind that from 15 to 30% to $30, it's a 100% increase, right? So $30 might not sound a lot, but if you've actually managed to buy crude at 15, 16, 17, 13, 12, or whatever, you're looking at a huge upside potential. Natural gas, what I said yesterday is still valid. Retesting and retesting and retesting. This is the third consecutive day. The broken descending channels, trend line resistance and support. So far, it looks to me like this thing can really continue higher from here. I mean, from a risk reward perspective, it looks very decent. So I'm still monitoring this channel and waiting to see for some type of a daily candlestick reversal on top of this trend line, and I might actually take that trade once and if I see something like that happening. What about USD ZAR? USD ZAR is in the same fate, shares the same fate with the rest of the exotic currencies, meaning that as long as the situation is what it is, exotic currencies, emerging market currencies are going to remain in the defensive against the dollar. You can see that so far USD ZAR is rebounding from the first areas of support that we found. But keep in mind that, in my opinion, all of those, here's another example, USD MXN is another example, or you want to take Brazil. I'm not going to mention Argentina because Argentina keeps defaulting literally every 5 years. You have a default from Argentina, so I would stay away from them. I think that at some point in the not so distant future, all these currencies are going to be magnificent long opportunities against the dollar. And not only they're going to be moving substantially against the dollar finally, but you're also going to have a great carry trade paying you extra to be holding those positions. Okay. Steve, with crude around $16, we'll see new highs in USD NOK. It is likely, which, as I've said, if you're looking for a stable economy, currency to be long. I think that the NOK is one of them. So if we go to $16, will we have a new high in USD NOK? We might, or we might not. I would love to see a spike lower in crude to new lows and USD NOK actually diverging. I would love to see something like that, because for me, it's going to be another indication that perhaps, you know, the downside is over. So I would love to see crude spike to new lows and USD NOK being somewhere there. You know what I mean? And then seeing a big reversal in crude to the upside, while NOK has never posted a higher high. Something like that would be, you know, a great technical indicator in my mind. I'm still short NOK. I shorted it somewhere there. I have to see my price, my entry. I know that I'm in the money. Last time I checked yesterday, I was decently in the money. And I know that I want to keep building this position for the longer term. So I don't care if we're going to move higher from here in USD NOK. Same with Euro NOK, by the way, right? I've started building a position in NOK, and I feel very, very comfortable holding it. Will Euro USD be bullish in coming week? Now, you know, not easy to answer this type of questions, especially if you consider what Euro USD has been doing, which is absolutely nothing. You can see that the range in which it is trading is contracting. We've had swings that started violently, a higher high, a lower low, and then we started contracting within that range. My assumption is that risk is going to turn lower, dollar is going to turn higher once again, and that means that Euro USD is going to turn lower once again, but I don't think that's going to last very long. So that's my assumption. I have to tell you that cable looks better, and I said that last week because cable was clearly bull flagging there. So I think that cable has still more upside. That's what I marked last week, that it should at least push towards the 127 confluence of resistances, the 61.8, 200 daily moving average also there. So I'm looking towards 127. I think that cable looks better, at least for the time being. And you know, obviously, what I showed with with the Euro USD applies to the DXY. You can see that the DXY's range has been contracting here, but I think that if risk does what I assume it's going to do, the DXY is not going to take much time to turn higher once again. Ideally, I would want to see a higher high in the DXY before it reverses lower and completely gets destroyed, because that's what I assume it's going to happen in the medium to longer term. And I think that once the dollar turns lower, it's going to be a very, very aggressive move lower. But I don't think we're there yet. I think this is likely a consolidation before we see another move to the upside, move that will likely get a lot of people trapped in the wrong direction of the dollar at the very worst possible moment in time, as the market very frequently wants to do. Now, Euro Pound, you asked about Euro Pound. Having to do with Euro Pound, I have to tell you that Euro Pound might attempt to turn higher here, might. But in order for me to be a believer in that, I want to see this proving to be a descending wedge here, because it might as well prove to be a very weak bearish consolidation, in which case we should see lower prices. So having to do with Euro Pound, in order for me to start looking higher, I want to see a daily close above 87.85. Okay, 0.8785. As long as we stay below there, I think you need to be very careful in trying to. Okay, yeah, that's my cue that your interview is about to begin, right?
E. It's an E chord. E for interview.
Our friend here asks why to short the SPY and not the IWM. Actually, that's a valid question because the IWM has remained weaker. The reason I'm focusing more on the SPX is because it's the global barometer for risk, and I know that a lot more people are interested in that. So I'd rather be talking and looking in terms of the SPX. Okay. And one last question, which I'm going to cover in seconds. USD CAD, nothing has changed with the USD CAD. I think that USD CAD still looks very, very good to the bullish side. You can see that I said when we were getting rejected from there that we might have another leg to the downside towards 138 and then higher. I still think that's the case. I still think that we're seeing a corrective pullback, which is very likely that it's going to find support at, at or above 138. Worst case scenario, 136. And I think we're going to see another bullish leg to the upside following that. I mean, I think you can see very easily a move from 138 back to 147 in just a matter of a few days. Okay, that's what I think about it. So, Coach, who do we have today for an interview?
Vladimir Rybakov.
Not Putin. Okay, that would be an interesting interview, actually.
Yeah, will be. He's a pro, and he has very good following, reputation, the whole ball of wax. So, thank you, Steve, and
enjoy the interview.
Vlad, I'm going to get you set up now. Welcome back to Face, Vladimir.
Thank you very much, Dale. How are
Great
you?
to have. I'm good, buddy. Considering what's happening in the world, the show must go on, right?
Oh yeah, I love this song and I love this. So yeah, it's totally agree with you. Thank you very much, Dale, for having me here, and I hope everybody is well and safe. And my best wishes to everyone.
Yeah, appreciate that. It kind of puts things in perspective. There aren't too many things more important than prospering, but definitely this puts money in perspective. So have you ever been in Zoom before, Vlad?
Once.
Okay, so there's a little green box. It's a drop down menu for you that says share.
The share screen, right?
Yeah.
Yep.
So we could see what you're up to, buddy. Okay.
Is it okay now?
Yeah, we have the Aussie Kiwi up there. I remember you talking about that.
I was going to say
some time ago.
Somehow, when we speak, the Aussie Kiwi become interesting.
Isn't that something? So so you're looking at weekly here, and
yep. I'll if you don't mind, I'll try to give my view here.
Okay.
Starting maybe with some background, we saw and then the technical, if it's okay.
Okay. Sure.
So we saw the Aussies suffer big time on the last months.
Yes.
Where they, against almost all the pairs, they created completely significant moves, and some of them are very important lows. All that was started with all this crisis and the craziness from China affecting directly on Australia economy. And as soon as China shows, at least to all of us, their slowdown in the pandemic and the control they managed to achieve, the investors, it seems like the investors believe that and rely on this, on that steps. And the first one to enjoy from such impact is Australia. They were the one to suffer from all the crash happening in China, and now as things begin to look possibly better, Australians are the ones to enjoy from that move. And that's what brings me to recently, on the last couple of weeks, specifically in the last week, focusing more on Australians and the Pacifics in general versus all the other instruments. If it's the dollar, if it's the Canadian, if it's the Kiwi, which is one of the pairs I see here. Right. So should I explain my techniques here, or?
Yeah. So basically, it suffered because of the shutdown in China. Aussie will benefit. Why long Aussie Kiwi? Because New Zealand won't benefit as much because they're not as much of a commodity currency, because it's more about milk. than about metals,
that's my
etc.?
assumption. Correct. That's my assumption. They are much
Okay.
less um,
Miners.
related to all the commodities the way that Australian is. New Zealand is with their own things, right? The milk
Right.
mainly. So the way I see that fundamentally and technically currently synchronized, and for me it's a very good sign. Technically speaking, observing the very high time frame, this is the monthly chart, we reached a very significant low at the end of this big trend cycle move, followed up by what I, as you know, admire the divergences, especially shown on the MACD indicator. We also are facing a very, very serious round number next to the 1 level, parity level.
Right.
Not something that we are evidence of every single day.
Can I ask you just one question? And I can't tell from this chart because it's so macro, but the low that we had a month ago, that low, okay, it actually took out the low from 2014 by a few pips, right?
Correct.
So, I mean, possible stop hunt. I mean, everyone had their stops there, right?
Correct.
Took them out and then turned. Classic. Nice look. Good eye.
Exactly. And that's
right.
All the things somehow come all together to one place. If it's the fundamental, if it's what happening currently with the economical view, the sentiment, the technical parts which make us face here a beautiful false breakout. Second clearance on the same zone. We started here in 2018. Now again, all that happens on its parity level. Again, too good to be true in some way, but it is yet true. Watching on the weekly time frame, the way I see that this very current leg ending with this triple cycle, also facing a bullish divergence on the moving average of the MACD. And going to lower time frame to trying to find how it is structuring the bullish view, we got a beautiful trendline breakout of the most recent one on a daily time frame. And we are developing here currently the second leg. Ideally, we would want to see that breaking through this high, establishing some bullish power. And after some retraces, I do expect this is just the beginning of something much more serious to the upside.
Okay.
And going even lower, each of these daily legs starts to make its own trending structures. This was the first leg with ABCD correction, and this is the second leg developing, which again likely to assume that next to these highs, ideally after clearing these highs, will create some sort of retraces. And I do believe that this is just the beginning of something bigger, unless there will be some
another spike in the infections in China.
Exactly. Unless there
another wave.
Yes, which of course could
abort the whole deal.
Exactly. So we need to remember that technical are only basically one thing of the whole picture we are looking at, as the market doesn't really care of the lines we draw. So we need to stick to the facts, how it's going to be developed, assuming it will be the way I expect, and like the previous leg, which ended with a beautiful ABCD correction and the divergence continuation. That's a good sign for possible bullish move to continue. So I definitely have my eyes on this one. I missed the first leg of the rally, but I definitely made it on the second leg after the ABCD was broken. So that's pretty much it. That's how I see that. For the Aussie Kiwi, I definitely think it's one of the most interesting ones. For those of you who are looking, for those of vendors who are looking like for a bit more quiet pairs, because it's compared to others, it's still quiet. And all this dramatical move at the end of the day, it's just 500 points, so nothing like that will make us sleep worse, right?
Okay, you know, there's something interesting about what you do, and you have to have deep pockets to do it this way, and well, really you don't, but if you want to make returns, it helps to have a big war chest. But You don't use any leverage, do you?
No. I hate this word.
Okay, so you just, all of your position trades are just, you have it fully funded in cash, right?
Correct.
Okay, so that's interesting. A lot of people. So, would you say that at the minimum, um, and you're also a mentor and a teacher, what do you advise? Everyone wants to, only put up 10% or have maximum leverage. What do you advise the people that you're teaching? Do you say it's okay for them to say be at 50% margin?
Personally, I think this is a fantastic question, Javier, because it's one of these subjects which is we prevent to talk about, but it's very important. Um, the Personally, I hate leverage. I don't believe in that, and for me, it's like an enemy for successful
Okay.
trading.
All
But
right.
it doesn't mean it's not usable. There are a lot of great traders using that properly. The way I see that, and the way I always suggest the way of action is, as long as you can control your risk and you would not fear of a loss, that's a reasonable leverage. But the moment you start to lose your comfort, to lose your convenience, to lose sleep, in some cases, it happens to traders. That means you are overexposed. Overexposure normally makes traders do mistakes. If it's forcing technical setups, if it's taking position they didn't plan to, just to cover some of the exposure and like to try to hedge partially here and there to improve their conditions. No, normally such things do not end up well. So
Okay.
the way I see that is, as long as a trader feels comfortable with the maximum risk that could happen out of a trade or series of trades he takes, this is a reasonable leverage for him. But at the moment this starts to be not comfortable, by holding the positions, it's a bad place to be. Personally, I have this kind of personality that unless I have very strict rules with myself, I tend to gamble. So in order not to find myself doing that, I
Yes.
developed this sort of rules for myself, and I never go leverage. No.
Yeah, know thyself because you've done it. So
Too many
let me
times.
ask you this: when you're 100%, no leverage, no margin, do you use market stops, or is it kind of a money stop as far as a percentage you're willing to risk on any idea?
You mean the protections?
Yeah, I mean, is it based upon technicals your stop, or is
Yes.
it based upon how much you're willing to risk
No,
dollar
I
wise?
don't love the order stop loss as it is by definition. Just put a hard stop loss, whatever it is. It's very good tool for day traders or short-term traders, for those who like go especially leveraged, right, with a
Yes.
certain risk. But I love the control over the position. So for me, it's mainly what validates my setup and what invalidates my setup. I
Okay.
have clear scenario of levels and the technical way it develops. What would be my validation for the view and what would invalidate it? If I reach the invalidation, I cut the position.
Okay.
Regardless the profit loss break even, I don't care at this point. Again, I have a full control of the risk here, and that's why I just rely on the chart and not specific.
Do you have any kind of discipline, Vlad, for booking profits? Do you is there are you a believer in taking partials?
Yes.
Okay, so what do you use to decide, or is it completely discretionary what you use for deciding when to take something off the table?
The same techniques I have for my entries, the same techniques I have for exits, basically
Okay.
based on cycles and the divergences. As long
Okay.
as the trend develops and there are no signs against, meaning no divergences against, no reversal signs, I'm riding.
Right. Okay.
Um, like for the case of the Aussie Kiwi, for example, my assumption is that this is how it's going to be developed. As long as it follows up, and that means we are currently developing the second leg.
Right.
And as I saw before, it's broken into mini waves there. So let's say as long as we are holding above the 61.8 of this level, I'm bullish. If suddenly, whatever happens, we get one straight leg going below all the Fibonacci's, it invalidates my view. So it doesn't matter what my lines show. That's what the market gives. That's what I take. I cut my position regardless of the result. So I tend to go with the straight facts the market gives on the chart, right? I definitely believe that the chart represents what's going on behind the scenes and the expectations of the investors and the traders of the coming events, coming news. So I just stick to that. And yes, the discipline is something you develop with time. It's I don't have magical tools how to become disciplined. It's impossible.
All right, someone's commenting on the price quote on crude at 27.80. That's because it's priced in Canadians, not US dollars, right?
Sorry, not sure I understand. Can you please?
Oh, well, you know, right now I'm showing 21.46 on WTI. You're showing 27.82 because it's priced in Canadian dollars, not US dollars. Is that correct?
It's in the US, but it's a spot oil on the CFDs.
Okay, right.
Not contracts and not Brent.
Okay, but is it priced in Canadian or US?
US.
Oh, okay. Kind of
Yes.
unusual. You have 27 and I have 21.44. Okay, and let's look at. Oh, you want to go to oil? Great. Okay, let's take a look at what you're.
Well, I didn't, but okay.
Oh, all right.
I don't mind if
Okay.
if clients asking for that, I don't mind. I'll share my view here.
Okay, what is your view in oil? You know, that was a double whammy with the price war between Russia and Saudi Arabia, and their, you know, that historic agreement did nothing to stabilize prices. I'm thinking that if you think China is stabilizing, that perhaps the price of energy could stabilize in here and maybe even recover.
Well, I guess this discussion could go for hours.
20 hours, yeah.
Good conversation over a beer or something in some pub. But on a bigger picture, the way I see, and of course, I might be completely wrong here, just personal view. I think this is a very well planned move. Fundamentally, not going into details on what brings me to think so, but what makes me to think so, but I believe Russia is preparing the ground for a long time enough now to hold the economy on stable level around price of oil being around 20. And I believe that all the current thing happening with the pandemic is a very good card in their hands, putting the pressure on the US. And of course, the oil industry in the US. It's a big rival to Russia, a big rival to the Saudis, and I think it's definitely the wheel is definitely on their hands right now to move. The bottom line remains the same: no flights around the globe the way we know it. No imports, no exports on the level we know it. Most of the people are yet locked down, so it doesn't matter what kind of rumors we are exposed to on daily basis.
There's no demand.
Sorry?
There's no demand.
Exactly. At the end of the day, there is no real demand, and it doesn't change yet. As long as this is the case, my view remains bearish. And I would not be surprised if, also technically, we have all the reasons to see one more low here.
Okay.
Will that happen or not? Of course, not my lines and not any other analysts or trader lines would change it. But personally and technically speaking, there are all the reasons for a new low to happen. Fundamentally as well, because if it is a real sort of price war happening between the Saudis, Russia, and the US, so as I said, I believe the wheel is in their hands. Then there is no demand currently. It's a great way to play some political chess here, and that's what they do. For me, it's sell the rallies and in that structures. Yes.
Okay. And what's life like for you in Canada with the virus? Are you on lockdown where you can't, you're supposed to stay home and only leave for essential services, etc.? Is it
Yes,
like that
that's
for you?
the official. It's not maybe as bad as
Enforced?
other places around the globe.
Yeah. Like Israel, you can't leave your house, right?
Correct. In
Yeah.
Israel,
So
under a real
they're,
lockdown, especially now in this period of Passover.
oh, right,
Um,
right. Okay.
So here it's not like that. Here, people still go out. The official recommendation is stay home. Most people respect it, and that's good to see. Again, it's
Okay.
not as bad as other places.
All right, and let me ask you this: markets are one thing, and we've had this recovery in the S&Ps and other global markets, and markets and the economy can be two different things. What's your view after this has happened? Kind of a kind of a big body blow to the economy, and a lot of people think you could just turn the switch back on. What do you think are the implications for financial markets and the economy after this type of shock?
Well, I don't believe that such shock we've all been experiencing could just disappear.
Right.
I think we all will feel the impacts for pretty long time. It already started. People lose jobs. Companies are going to bankrupt. I'm not sure how to eat what the steps of the Fed recently, throwing so much money into debt. Just try to save whatever is possible to be saved, especially companies under the risk. Historically, such things didn't end well. How this will end, I'm probably not the right person to ask.
Okay.
Technically speaking and logically speaking, I don't think such dramatic, massive event like we all been evidence to could end up so quick. The impacts are something we're going to feel for a long time. So what we see currently is just printing money, and it seems working currently on the investors. But the real important thing would be here: what will happen on the coming 1-2 months, assuming they will take the lockdown down, because the Fed will not be able to continue in purchasing without certain limits. What will happen there? Will the companies be able to continue their activity, their work without the Fed or not? As I said, technically, I think this is a beginning of some deeper correction.
Yeah. Okay.
That's how I see that.
I respect it. And a lot of things that were happening before this, are politically incorrect now, like buybacks, using tax cuts and debt to buy back their stock and then asked to be rescued after it. So the financial engineering game is going to have to change a little bit, don't you think? Or it's over.
Yes, and I think it's time, and I think it's a beginning of something much more significant than just a pandemic, and that's all. I think the financial, as we know it, will change. To which side, I don't know. Maybe it's going to be much better than we all expect. Or
yeah, let's hope.
Let's hope.
Definitely. Okay, you know what I say, Vlad. Hope is the oxygen in our life and the carbon monoxide in our trading. So I really appreciate you being here. Best way for people to follow you, Vlad?
Well, once again, first of all, and thank you to having me here. I love your saying, by the way.
Thank you.
I'm available on my blog,
Okay.
which is vladimirrybakov.com, as the name suggests.
Okay.
And to those who want to enjoy the live trading rooms on daily basis that we hold and our live trading chat, I'm available in Traders Academy Club, myself and my team.
Okay, I like your briefcase.
Thank you.
Well, my
I
trading
gained
warrior.
some weight here. You see that?
Yeah, I'm
That's
not
how I used to be.
Well, I tell you what, buddy, really appreciate you being here and talking Aussie Kiwi and your style and methods, and may your loved ones remain untouched, and
You as well.
pips rain down on you, bro.
Thank you
Okay.
very much, and stay safe. Good health to you and yours, and to all the listeners. Thank you for your time. Have a great day.
All right, everyone. That's Vladimir Rybakov, and if you're a Twitter person, you could follow him at his name, at Vladimir Rybakov, and there's his website, Traders Academy Club. So that's Turnaround Tuesday, everybody. Crude's trying to turn. I'm taking a shot at gold, and EG's acting okay. Everyone have a great day. Remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. Adios.